here. Today's Wednesday, February 28th. Well, we've had gold up about 1% in the last week. The other three metals are a little bit lower. All the details are in the write-up. Today, would like to talk to you about mining stocks versus mining metals. This is a discussion that we often hear bandied about on the internet and elsewhere. And there's a line of thinking that says, if you want exposure to gold and silver, don't buy the metal, just buy mining stocks. And today I want to talk to you about why those are not the same things and give you an example of why it's more important to have physical gold and silver to allocate towards your precious metals portfolio. Now, an example, let's just use Newmont. They're one of the largest gold mining companies out there, one of the most stable. And if we were to go back to, say, December of 2021, the share price was a little over $79 a share. Back then, gold was about $1,800 an ounce. And if we fast forward now, we've got gold is $200 higher. We're over $2,000 an ounce for the spot price. But the share price of Newmont is less than half of what it was. So it's down to $31 from $79. So that doesn't jive with a $200 higher gold price normally. We would think that the miners will do better when the gold price is higher. The problem is inflation. And we have, right now, we've got inflation is really eating into the costs to mine metals. We have fuel costs, labor cost, permit cost. All kinds of costs have come up with inflation that's impacted the miners' bottom lines. So even though gold is up $200, the profitability of mining the gold is virtually no different than it was before. It's just the costs are higher. And so now it's costing right at just under $1,800 an ounce, all in cost to mine that ounce of gold. And that's one of the reasons we've seen gold rise, is the costs to produce the gold have risen, or silver, whichever we're talking about. And so to have an allocation to silver and gold, physical metal, that's the best way to go. Now, if you want to own some mining stocks, just be careful. It's like a minefield out there. And yes, there are cases where you really hit it big on a certain mine stock. Usually it's a smaller company, and you need to have somebody knowledgeable that's helping you pick those. Either that or just pick a smattering of a lot of different ones. But you have to be careful in that, because a lot of times those companies also go bankrupt. Physical gold and silver never go bankrupt. You're always going to have value, and you're also going to be able to take advantage of the rising price. It doesn't matter what it cost to mine it 3 years ago when you purchased it. Just because the costs have gone up now, that doesn't impact you in a negative way as a holder of physical gold and silver. It actually helps you, because the cost to mine and produce is like a rising floor underneath, building a base of support for precious metals prices. So keep that in mind the next time you hear somebody say, oh, if you want exposure to gold and silver, just buy some mining stocks. They're not one and the same thing. Look at, and just use the price of gold for an example. Which would you rather have? Plus 12%, 22% from $18 to $2,000 an ounce, probably over that, over 22% plus in that 3-year time? Or would you rather have minus 58%? So that's the difference. And thank you for tuning in. We'll have more great content coming soon.